Hello, everybody. My name is Natasha. I am the owner and operator of Tasha's Tax Service located here in Milwaukee. And the reason that I'm on here is because I want to try to help some of you guys better understand cost of goods sold. Now, I have a lot of clients that come to me and they're like, Tasha, how do I calculate my expenses? Well, you're in for a treat. So today I had a couple of minutes before one of my clients came in, and I thought it would be a good idea to explain to you what the cost of goods sold is and how it's beneficial to you. Now, typically, there's two types of companies. There's a service company and there's a sales company. There's companies that offer services to you, such as me. I am a service company. I offer to you my tax preparation, accounting, bookkeeping, and various other services. Um, a sales company would be something like a Walmart, Target, or our small businesses, such as um, can't think of one right off the bat. Oh, Tutu. Um, I have a niece named Anitra that sells Tutu. Awesome company. She does them by hand. You guys should check her out on Facebook. As a matter of fact, let me get the correct name because I don't want to get it wrong. But she does them by hand. She sews. She doesn't just buy her things from Amazon. She's a sales company and she makes tutus and other various different items for kids. They're really awesome and affordable. So one moment while I make sure I get the right name of this company, and then we're going to go further into we're going to go further into cost of goods sold because a lot of, like I said, a lot of people come to me and they don't know, hey, what is the cost of goods sold? So now you're going to get to know exactly what the cost of goods sold is. And the name of that company is called Tutu Cute Fashion. Again, she makes these tutus and different various kids' clothes by hand. Um, she sells them. They're not pre bought and then resold. She actually makes them. So you guys check her up on Facebook if you get a chance. Otherwise, let's get back into this presentation because it is going to be helpful to a lot of you guys. So in order for me to do this, I'm actually going to do a screen share with you guys and kind of I'm going to go to schedule C. Now, cost of goods sold is an expense that you can deduct from your taxes. With the cost of goods sold, it includes the direct expenses that you incur for your product that you sell. So if you sell a shirt, you're going to have costs for the fabric that you use, the buttons or zipper, however you make your shirt, the thread and dye, and various other things that it takes to make this product. Those will be the material needed. Then you also have the cost of having the material delivered to you or the transportation that it takes for you to purchase the material. So that's an expense that you can use to deduct from your taxes. A lot of times, people will just put how much money they made from selling the product, and that goes on your gross receipts. That's the sales. So that's the income that you made. But the expense that you incur to make the product, that's a deduction on your taxes. Now, what I'm going to do is kind of show you how to deduct that expense and the proper formula that it takes to deduct that expense so that you're able to have a heads up on doing your taxes and kind of getting everything together. Another thing that a lot of people come to me about is how do you properly document this on your taxes? So any tax preparation place or company or accountant should be asking you for a profit and loss statement or income statement to prepare your taxes. If my client does not have one, I will provide them one so that they can kind of properly just go through the channels that it take to document everything and put everything in a perspective place. but this is typically what we ask for you guys to bring in. Um, Again, it's called an income statement or a profit and loss statement. And this just kind of helps me and any other accounting or tax preparation company to keep everything organized and to have proper documentation that's required by the IRS. So I'm just going to show you what that looks like. I'm not going to kind of go through it. I'm also going to show you on here where you would see cost of goods sold. So right here, you will see cost of goods sold here. And again, cost of goods sold actually is an expense. And what that does is reduce the sales price that you make. So if you make, say you make $10,000 and your material and the cost of the goods sold is $4,000, well, you didn't really make 10,000, you make $6,000 because you get to reduce your income by the cost of goods sold. So that's just a quick thing. And this is a typical income statement. And this is what you should be going into your tax preparation office with or to your accountant just to document your income. And then we will ask you if you had documentation to prove your income, which you should just be keeping your receipts and credit card receipts and bank statements up to date to for your end. But when you go into the tax preparation office, that is the documentation that we would need for the IRS, just to prove due diligence. So let's go back to the cost of goods sold. So again, on your Schedule C, which looks like this. If you use forms mode on a tax preparation software, it might look differently. Because I went to school for accounting, I like the forms mode better because I know how to go through them and utilize them a little better. But every accountant and tax preparer is different, and that's okay. That doesn't mean that you don't know what you're doing. It just means that everybody likes to do things a different way. I prefer forms mode. So this right here is a Schedule C, and this right here is the cost of goods sold. You would put on here costs, and then these other two right here is like the lower of the cost or market, and the other, this is just basically different other ways of documenting the inventory of the closet. So it'll ask you, was there any changes in determined quantity cost? Um, um, I'm sorry, one second. Okay, so it says, was there any change in determining quantity, cost, valuation between opening and closing inventory? If yes, a tax explanation. Right here, I won't really go further into that because that would take a whole lot more time. But let's just get to the guts and go right in. So the inventory at the beginning of the year. So what that means is after last year, you closed your books December 31st and you had some inventory left over that you're going to put back in population to sell. So they're going to ask, what is the how much beginning inventory that you have, because that's going to be utilized. Then we're going to have purchase less cost of items withdrawn for personal use. This right here, you're going to deduct because this right there, this is just only for personal use. So we won't really go into that. But this right here is going to be important. So you got the cost of labor. So do not include amounts paid to yourself, but the cost of labor, meaning say you have somebody that make your product for you and you have to pay them to make the product. In this case, you will be able to deduct the labor expense that you paid that person to make your product. Say they charge by the hour. Oh, I charge $1.36 to create this fabric for you per hour, or whatever the cost is. You're able to deduct that expense. And then here we have material and supplies. Material and supplies meaning what material and supplies was used to make or create that product. And then we have other costs maybe incurred like transportation or delivery of that product to you. You're also able to do that. And then at the end, you're going to add all this up and you're going to add lines 35 through 39 and you're going to put it here on line 40. So say after doing all that, say you had, I don't know, 200, oh, five, or I don't know, $500 worth of um of inventory left last year. Oops, sorry. So you have $500 worth of inventory last year. We're going to skip this. It cost you, I don't know, $120 to have everything made. The material cost you, I don't know, $900. Um, the company charge you a shipping fee of $150, or the person or whomever you buy from. And if when we calculate all of this up, let's see what we get. So we're going to calculate 500 plus 120 plus 900. Oops, I'm sorry. 500 plus 120 plus 900 plus 150. And we're going to get $2,750 of expenses that you already have incurred. And then we're going to add the inventory at the end of the year. And again, this inventory at the end of the year is not the amount that you charge for the product, but how much you pay to have the product either made, shipped to you, or the material and supplies that it costs you to have that. And say we're going to do, I don't know, let's do $5,000 of inventory this year. And boom, we have $7,750 of expenses for the production of your product that you're going to use to sell to consumers. And this right here would then be transferred onto line 4 of the Schedule C, and then it would be reduced. So what you would do is this would be a deduction. So the income right here, so line 1 would then be deducted. So this means this will be a subtraction right here. So understand the cost of goods sold is a subtraction. So here we go, $7,250. I'm sorry, what did I say? Oh, $7,750. And say you made, I don't know, $22,000 this year already, you're able to say your gross income minus taking line 4 and subtracting it. So right here, this would bring down that $22,000. And right here on line 5, you would take and subtract that $7,750 from that. And boom, that would give you your gross profit of $14,250. This income right here would be used to say how much money that you made. You would bring that down, and that right there is how you do the cost of goods sold. And this is for sales companies, companies that sell products and various different things like that. That does not work for a service company because if anything, that would be for a service company, that would be like the education that you need to learn your skill, but it wouldn't go under cost of goods serves. Cost of goods sold. So thank you everybody for listening to me. Hopefully this helps somebody. And again, if you would like other assistance in this area, or you like what you heard, please go to at Tasha's Tax Service, um, located in Milwaukee, Wisconsin, at 6416 West Capitol Drive, or you can go to my website, www.tashastaxservice.com. I truly appreciate you listening to me, and hopefully this helps somebody. You guys have a great rest of your evening, and have a good day.